So welcome. For the ones that already joined, it's actually not the first time we're doing that, but we've been running that for, I guess, nearly about a month now. The purpose being to actually allow executives in different areas to meet, catch up, and take 45 minutes of a time to exchange idea and perspective with the following principles. The principles is quite straightforward. We have invited guests. I'll say 2 words about that in a minute. And then we have about half an hour question and answer session. With that said, just as a reminder, as I said, if you can move on to the next slide, Manu. The purpose is for you to stay for now muted. And actually, the purpose is to open up your mind, listen, refresh perspective, or potentially learn new things. Hopefully you are already set with a coffee, depending on which time zone you are. And the purpose is obviously to be as to show empathy as much as possible. And you'll have largely the time to discuss the matter if you have questions, to ask questions to Manu. So without enough ado, I'm quite happy to welcome Manu. Manu and I have been knowing each other for quite some time, actually. He's actually based in a beautiful city called Barcelona, and he's been both in for many years into the consulting world with us as well. A very important background in teaching, and he's actually a professor at Esade, and he set up a company called TheTopLineLab that is specialized on pricing. And the company has been rolled out with some success about 4 or 5 years ago. And Manu is going to be sharing, some insights about key strategic consideration that relates to exiting the crisis that we're currently in. With that said, without further ado, I'll leave the stage to Manu, thanking him again and again. As I said, stay on mute. With that said, you'll have the chance to actually speak up, ask questions right after the 15/20 minutes presentation of Manu. Thank you. The stage is yours, Manu.
Thank you so much, Laurent, for the invitation. It's really a pleasure to share this moment with you all, and especially with the marketing community, because we're experimenting a complicated time. But I think what's very clear in this crisis we're living in, except for obviously the health situation, we're living a demand crisis. And a demand crisis commands an answer from the marketing community. So we'll try to explore today, what does it mean, a demand crisis, basically. Basically, there is 2 logics behind it. There is a recession logic and a recovery period. So marketers need to project themselves on the short term. Obviously, we need to be able to provide quick answers to the management and to the company, but also we need to project in the future. And when this recovery will happen, is it September? Is it January? So the capacity to forecast demand is totally central. Then in this logic, nobody knows what is the scenario. That's what we know. We know that we don't know, basically. And uncertainty is very important. So that's why, in fact, the capacity to have a kind of high productivity in running scenarios is totally key. So how frequent can you fine-tune your budget, your projections, and provide this information to the other stakeholders of your company is totally central. And then I will deep dive into what I call the pricing and revenue management battle plan, because I think pricing is a kind of neglected lever within the marketing portfolio. And I would like to just stress what can be done through pricing. If it's a demand problem, for sure, there is a pricing action around it. And then I will, just as a kind of, let's say, extension, but I think many companies need to raise their pricing game and to improve a little bit the way they provide some educated answers to this complex decision. So we are in a demand crisis. What does it mean? It means that what we hear here and there about liquidity, cost cutting, and we see a lot of companies starting to lay off, for instance, or to downsize, trying to look to protect as much as they can the cash and the liquidity. That's important for sure, but the demand logic demands a kind of a more profound, let's say, exploration of what's happening. First, the fact that we're living a demand crisis is a good news, because in fact, the rate of the impact and the timing of the impact and the recovery differ. So it's different across sectors. The speed is different. It's different across region. It's different across segments. So if marketing is delivering on the promises to have a very clear view on consumer patterns, on segments, we should be able to provide an answer of where is it hitting worse, basically, but where is there also maybe an opportunity to be captured. Then uncertainty is a big issue, needs to be controlled. That's where we need data and we need scenarios. So how frequent can we update the scenario? How well do we run these scenarios is very important. It's also a long game, so the decisions we make right now in panic mode, in urgency, will have a consequence in the recovery period. So be careful, think about it as a long game. That's very central. Then when we talk about revenue or top line, we talk about value. The value we extract on the market is also the value which is perceived by the consumers. And today, in this logic of perceived value, there is a logic of empathy, which is very important. Your customers are also impacted. Your what you do right now is also under scrutiny of the world. So maybe there is also sometimes we're upset in the market, in retail, in pharmacy, and so on. Sometimes some bad practices as well of pulling the price level. So be careful. Being dynamic, agile, adaptive with pricing is different from price gouging, for instance. So very quickly, I'm going to run into it. What is very important is that demand will return to the full force. The question is, how much will it take? So there is two sets of actions we can differentiate. What are the pricing lever actions we can do during recession, right now? We expect to have the recession between now until September, October, or January, depending on the sectors. But so first, it means that you need to say reposition or reevaluate your demand curves, understand a little bit what's the kind of sub-product or types of customer which are at risk. Did we lose the demand for good, or is it just something which is displaced in time? And we need to have this vision, in terms of scenario between what is how is it impacting current business versus the impact on new business. Then it's an answer for marketing, because it's not only pricing, it's also portfolio. And here, marketers, particularly leveraging behavioral science, for instance, can provide a smart portfolio answer. For instance, anchoring choices in terms of product, introducing maybe a lower price version. That's what P&G did back in 2009 after the crisis, launching at the global level a range of product basic that was initially launched for India, for instance, or for the low-cost countries. You also need to maybe think about a way to mitigate the impact on demand on a temporary logic. So a type of promotion, for instance, a temporary discount to avoid a price drop, because recovering the former price level will be very difficult, and there is a risk of price war, which is very clear. That's, for instance, what Volkswagen did in the Dieselgate. They put 5,000 discounts for ecology on the Golf, for instance. So maybe you can a little bit incentivize your demand with temporary discounts. And you need overall to protect your value pool by maybe unbundling services. So maybe in B2B, for instance, or B2B2C, some companies tend to include everything, including some elements that have a value for the customer, and could be maybe, let's say, a charge, that's what we call a surcharge in pricing, with an extra fee. That's what the airlines did post-crisis. That's where, in fact, we had the first really acceleration of the pricing for ancillaries, or other for cross-selling, for luggage, for insurance, and so on. Then you have the moment during the recovery, so post-recession. Here, that way, in fact, the more you know the demand, the more you anticipate the right moment for this, let's say, switch of context. That's where there is a big price to be won to the ones leading the price change. So when you start to send a signal to the market to pass an increase on which categories, which segment is very important, because the time that your, let's say, followers react, this extra price sustained by the demand which is coming back is directly bottom line impact. Then that's a moment where you need to introduce and to change your portfolio, basically by introduce new products. So don't obviously release innovation in a recession. Save this innovation if they matter for the launch of a kind of upgrading of your product line. So upselling through a better value on your portfolio in recovery periods. And then that's the moment to selectively pass price increase on a regular product. And then pricing is also, so I mentioned several times that there is the price, there is also the mix effect. So pricing and cross-selling, upselling opportunities are very, very connected. In general, there is a big opportunity as well, even the bigger maybe with pricing, to really manage cross-selling, upselling opportunity, to really have a clear vision of what are the dependency between your product and other products in your portfolio. So the battle plan, the first element you should do is quickly pivot your pricing scenario, okay? 2020, your plan is already wrong. We know that since a couple of months that everything started, no? So what are the new scenarios? Where should I act? What is my decision? Is it list price? Is it discount? Is it promotion? In fact, it's a combination of all that. In many cases, these decisions are siloed. They are under different, let's say, heads in the company. The best answer to recover and to improve your top line, basically, is really to have kind of good knowledge, an umbrella logic, where we are able to understand where do I put my effort, basically. Is it 1% promo, which is better? Is it in discount? Is it a price increase or price decrease? So here, the productivity of this scenario building is very important. So you should be able to not only to build an action plan, a very clear one, but also to be able to communicate clearly to C-level, but also to stakeholders. And here, in a scenario, we have different elements we're going to explore, but the big element is the baseline selection. The baseline selection means we are able to define a comparable basis for the change we want to project. So it means we need to be able to isolate elements that have an impact. We need to be able to isolate the pure COVID impact rather than the normal logic of the year we project, for instance. So here we should be to change quickly to identify and to visualize clearly the variables that impact top line or bottom line, for instance, being able to look at elements in interaction, list price and discounts or promo, they are related, they have an interconnection. It's complex, there is multiple stakeholders, so we should be able to do it and digest these changes to give clarity to the company. Okay, so by steps, basically to be clear. I mentioned that in running margin impact calculation, let's say, the first element is understanding what are the drivers and what is let's say the net impact of your scenario. For that, the baseline is totally crucial to be identified. And then you are going to play with, let's say, additional levers, additional elements we are going to project. So it could be a kind of cascade, if you want, of elements. I will simulate first a change in my list price, or then I will change or replace the same amount of impact by a discount. And little by little, you try to play with different levers in combination to understand that there is a sequence, in fact, which is more efficient. In this logic, baseline versus simulation, isolating the contribution, the sensitivity, in fact, of each of the levers you're playing with, there is a logic also of understanding the, let's say, the output effect. So the consequence of the intervention you are projecting. And here, there is the logic of break-even is relatively important. Price as a lever has a huge impact. So for instance, on Fortune 500 companies, it's an average, but 1% increase, it has been studied that leads to a kind of 8 to 11% in operating profit increase. So pricing as a lever is one of the most powerful lever, much more than conversion, much more than volume, but the way around is very important. If you decrease by 5% your price, the impact on of the volume you need to break even, to have the same level of margin, is 17%. So be careful with the price decrease. That's very, very important. understanding how price impacts on the two direction, on price increase, but also on price decrease, and they don't operate in the same, with the same intensity. That's also very important for you to project, but also to educate people when there is an important decision which is at stake. Okay, 5% decrease, 17% extra volume to compensate. So obviously, when you are in demand crisis, trying to incentivize volume by creating an even superior need of volume to compensate in margin, you're doing it the wrong way. You have to focus on margin since day one, in fact. Okay, then what pricing can do is really to go surgical on the changes. So saying I will increase or decrease X% is wrong, basically. You need to go to the detail. So your actions need to be supported with data and analytics. So the quality of the data flow, the quality and the granularity and the accuracy of the data is very essential, but also the kind of sequence of insights you can provide to your stakeholders is very important. And here, for instance, you can start to compare and to understand that some scopes have or represent a better opportunity to act right now. What we call the waterfall is a cascade between gross sales and profit, for instance. So here, by comparing year to year, by comparing by segments, by a channel, and so on, you're able to understand that first, the execution of these discounts, promo, and rebates is not necessarily compliant with the policy, first thing, but also relies or shows some opportunities of reassigning budgets. So even before cutting budget, reallocating the budget where it's more efficient is even more important. Then the other element is trying to identify where we already are leaving money on the table. And efficiency on pricing is totally essential because we already, because it's a cross-functional and involves multiple stakeholders, we do it quite poorly in terms of execution. So a kind of dispersion chart where you can spot already the consistency of discounts, promo, rebates, all along this kind of chain of P&L performance, basically, it's quite interesting. Same with net price. When you start to integrate it together, you realize that the real net price that you really extract on the market is something which is not controlled because it's not visible for the company. So making it visible allows to spot also opportunities. In the same fashion, in our sector, so in pricing/marketing, let's say, promo is also very poorly addressed. The promotional lift is in general poorly calculated. The logic of pre, during, post-promo is important. So when it comes to spotting short-term improvements, maybe promotional efficiency is the first lever you would like to pull, because it's even the promo depth is very important. The recurrency of promos is very important. We have multiple promos that are not necessarily efficient or delivering the same level of ROI. So the first element you should maybe look at is really on the promo performance. Going further, just to see where we can increase these capabilities. So here we're saying that there is maybe a short-term effort to do. There is a quick wins logic within these scenarios where by integrating better the data and providing a visibility to the company, which is not necessarily available, we'll be able to already find some improvements right now, basically. And these improvements don't come from the market. They don't come from the competition, or they don't come from demand and consumers. They come from solving our own inefficiencies. There is studies that say that 30% of our sales are lost, not because of the market, but because of internal inefficiencies. We should have priced maybe higher, and this higher price or these lost volumes account for an average of 30% of the sales. So by being perfectly efficient, we could have sales 30% higher, or revenue 30% higher. Okay. So once we address the short-term inefficiencies, and because we are going to improve a little bit the data, the accuracy, the calculations, we can maybe, it's time to maybe raise the game and to go for more analytics. And that's why it's time at some point to really structure correctly the way pricing delivers results. And it's through an holistic logic from the data to the models we can implement. So there is a lot of data which is totally siloed in the company, the transactions, the product portfolio or the product element logic, The way we compute the demand as well is very poorly addressed. In general, we're not really able to leverage correctly or to connect information about the demand patterns, the demand flow, the traffic on the website, for instance, with the funnel and with the transactions. Joining this demand to transaction chain is very important. A lot of context, for instance, in general, we have a poor matching of competitors' prices. So the fact the way we integrate this contextual data, competitors' prices or behavior, for instance, to, again, transactions is really poorly addressed, because maybe we have 10% of competitors' benchmark, which is really matching what we have in the system. And then also we need some clear KPIs and guidance from a strategic point of view. So there is a huge effort to be made in marketing in general, or at the company level more broadly, on integrating different data flow that we need for marketing. And then you have the way science can deliver some superior results. That's what I call the foundations. And the foundations are first digesting the complexity of the market we operate in. And that's what clustering, segmentation can help with. So the segmentation layer, micro segments or behavioral segments of customer and product allow to create a kind of gigantic matrix, if you want, that allow to first digest the complexity we have, but also create a kind of unified or homogeneous unit of analysis for the later models. Okay, in general, we try to mix a lot of things and we miss a kind of standard unit of analysis. That's what segmentation is providing as well. Then you need to build the first models, and the models in marketing are a kind of response function. We have an input, we have a target. How much of this input variation translates into a change in the KPI in the target, to simplify a little bit. And this same effort on data, this same effort on structuring a large segmentation matrix, and the main model we're going to build, the first aggregations, the first decision trees, can feed several domain-based, let's say, domain response. And these four main elements, volume on the side, but all these four elements are totally connected. What we want to, in base of these models, what I want to do with pricing, what I want to do with discount and markdown. Markdown will be very important in the coming weeks, because we need to be able to control the way we discount and we protect the total pool of revenue we can do. Promotions is super important, both price promotions and non-price promotions. And then the effect on the mix is also dependent from the other ones. It's also a very potential important lever. Here, because so Laurent is from that, he also has a big foot in academia. Surprisingly, academy here in the models on pricing, on markdown, on promo, on mix is more in advance than the capacity of the business world to digest these models. You have a lot of models which are super advanced in pricing and markdown, for instance, that could be leveraged by business. So it's also an invitation to speak to academia to be able to go and to explore what's the best practice here. So we are lagging behind in the business, and there is a lot of things which are quite useful in the academic world. Very quickly, if you have to choose basically some of the models you could leverage to go further, basically, clustering is totally key. And the capacity to generate micro partitions and dynamic, so it means connecting to the flow of data or traffic of customer patterns, for instance, is central. So clustering is the basis for dynamic pricing. And here, the more you go granular, the more you're able to isolate or to understand that one specific micro segment is has a potential impact on one KPI you want to maximize, conversion, upselling, the more let's say specific and efficient you'll be in your answer, in your response, in your intervention, if you want. Forecasting as well. Forecasting for me is one of the most important elements today, and the big element that marketers are missing. There is a lot of progress that has been done in the last year in data science on forecasting models. Here, marketer needs to raise again clearly on the capacity to forecast and to integrate in the forecast, let's say, events. My promo, for instance, it's an event I should be able to include in my forecast. My competitor's promo is an event on top of all the calendar events. So here there is a lot of effort to be done in forecasting to be able to outperform competition in the recovery. Experiment, I think in marketing, in behavioral science as well, we are improving here, but systematizing, for instance, pre-test, pre-post, A/B test, bandits, for instance, is very important. We do it well in the web, for instance. Why don't we do it better in promo, pricing, product introduction, size and format, for instance. So there is a lot of things in market research, but there is maybe something in live that could be a bit improved. What I observed is that there is a lot of new offering coming to the market on A/B tests as well experiments to provide an evidence on the best course of action. And the last is optimization. So the pure logic of mathematical programming to optimize the decision. That's something that is also going back in fashion, let's say, where we have a lot of progress to run optimization at scale. Okay, and that's just to conclude here. So there is a lot of potential to raise the game in data science in particular with better models and better data. But the last comment is, or last element I would like to say, that a call to re-inject the pricing variables within the marketing toolkit, let's say, because pricing power, the capacity to be more efficient with the price point, has a huge impact on EBITDA and shareholder value. That's something we did in that was a research project first, and we built a model to identify the capacity to have superior pricing power, so to increase price without impact, let's say, to simplify. And we demonstrated that there is a huge impact on shareholder value. And here what you see in the model is the section post financial crisis in 2008. And you see that first, top companies in pricing power outperform competition, but the speed of recovery is much stronger for these companies than the other ones. So just to conclude here, and that's this invitation I would like to say, to invite you to go to the pricing field and include this lever in your own toolkit.
Thank you, Manu.
I will have a look to the questions, maybe over the chat.
Yeah, thank you, Manu. I guess the floor is open to question, obviously, and there was one question. The gentleman called Pierre, if you want to raise a question or may do the host. I think there was one striking point in your presentation at the very beginning, which was and the question that was formulated during your speech is, what makes you so sure that demand will return to the full force, as you stated in your hypothesis, given what we've been hearing here and there about the uncommon, I would say, situation that economies have been in. What brought you to actually put forward this hypothesis?
Yeah, so I think that was Pierre. So it's not exactly true. I will try to cheer you up with something positive, but so it's not exactly true, because we need to identify what's the demand which is totally lost, which is the case because, so for instance, mobility has stopped. So part of the demand related to mobility is lost. But now we start, but it's also a matter of timing. So we know that a big portion, in fact, of this demand is going to come back. The question is the when. But I was saying that some right at the beginning of the crisis, for instance, demand will come back to the full force. Now, I'm a little bit more confident even with this logic, because we start to have the first numbers in terms of sales, or the first understanding of what is the real impact of the COVID on operations. So for instance, with customers we work with, or on numbers you can see. And in fact, what was expected to be a pure lost sale, so what we lose because of the contraction of the activity, at the end, the impact seems to be lower. So for instance, in automotive, for instance, yes, there is a big impact, but the sooner, in fact, the confinement stops, the more likely the full demand to go back. So what I mean by that is that, yes, there are some aspects or sectors that are severely hit, basically, but some sectors that were very negative in their projections, I'm thinking about hospitality, for instance, start to observe a very big jump into bookings, for instance, when their initial forecast was darker than that. So yes, it's not exactly that. I'm pushing a little bit. It won't go back fully. So that's why I was saying also that you know that your budget 2020 is lost, but it will be something different. But if it's 40% or 30, or it's a 8 or 12, that's where the difference lies, basically.
Okay, thank you. Pierre, if you want to stand up and actually discuss further the point, you're very welcome to unmute yourself and put your camera on to make the interaction more human. Obviously, I'm asking Pierre, but if anyone has a specific questions, please feel free to step up and ask. Obviously, and don't be scared. It's quite technical, but I have one or two questions myself to ask if there's no question available from the audience.
Basically, just to complete on that, nobody knows what will happen. Basically, also, so I'm saying that more as a statement, but we know that we don't really know what is going to happen. But what I see that now is we are going a little bit outside confinement, and people will be activating activity. It's a little bit less negative than expected. But also some sectors will be totally hit and will take a month or years to recover.
Okay. Any questions? Okay. I have one question, because obviously all that is quite interesting in general, I would say, but would you say that if a given company didn't put time before a crisis, it will be more difficult to start the process of actually doing better in a crisis mode? Why do I mean that? Because I guess there's probably a lag time between the time where you're going to be able to align all the data you need to build a model, to learn, and then take action upon that. So the question is very much, don't we need to be proactive rather than reactive in order to actually potentially fight back the current situation, specifically if we did not have the ability to set ourselves ready for the new period that we're currently living in?
So clearly that's a very good question, because clearly the crisis took companies with totally different levels of preparation. So nobody was prepared first, but some companies had done a little bit the homework before and were a little bit more equipped to react. I think, yes, there is a lot of things that you cannot recover. For some of them, it's too late to pretend having a kind of very surgical logic of the answers. So some companies are better prepared because they did the relevant effort before. But I think overall, you don't need to have something which is rocket science and super complex. There is logic of really spotting the inefficiencies first. That can be done without a perfect quality of data or without the perfect systems. So that's, I think there is an urgency now to really focus on this, let's say, correction of internal efficiencies. But obviously some companies are much better equipped. But I'm seeing at the end with the pricing power, there is a lot of works or surveys or reports on data-driven leadership as well. So the delta or the way data-driven companies or advanced companies outperform their peers. And this gap between the data-driven leaders and the rest is increasing year after year. Yeah. So what it means that starting today, even if cloud is cheaper, models are being democratized, the cost of doing it is bigger, because some companies really started before and did the dirty job long before. Yeah. So there is a big difference here.
Thank you. If you see on your prompter, Manu, there are a few questions that popped up. So rather than actually reading through the question myself, maybe you could go through, I think there are questions that relates to impact of digital products, or specifically for people that make some of the services available on digitally, so potentially lowering price. What does it mean? Different impact of sectors, etc., etc. So maybe you can take, you may try to answer, one or two of those questions, and the ones that actually stated the question, please feel free to demute yourself and actually speak up. You know, it's you're very welcome to do so.
Yeah, what we'll do, if we don't have the time to answer everything, I will also, we can capture the questions and
yeah,
and answer offline by email, or can do that. So yes, a very good question for digital product. So for instance, SaaS offers, basically, where you have a good, better, best approach, no, different layers, and these layers are defined by features. A lot of digital companies start with the offering, but they don't really think about the monetization of the offering. So here, you're totally right, basically. We need to differentiate between nice to have product and must have, but also at a more granular level, what are the must have features that really explain the conversion for one product, one digital product versus the rest. So here it invites at being much more sharper, I mean, better at defining these must have features, because these features are the ones that are going to explain, one, the way volume or demand is going to be sustained in time, and the rest is how can we maybe use the less important features to maybe create a digital offer, which is a basic offer, a cheaper offer, going or building the low end of your portfolio. So that's very important to identify clearly the features, the attributes, the value of these, maybe with evidence of usage you can have in the digital world, and maybe rebalance or rethink a little bit your portfolio, your good, better, best logic by adding a low value, a low end, with the core, let's say, features that don't trigger the conversion or an upsell toward a more sophisticated product.
yeah.
Yeah, that's very important.
And I think one of the questions that, you know, indirect relates to that, because I think Juan Pablo asked the question about available pricing from, you know, private label brands that already have hard discounters, you know, how to cope on that and what to do about that. And, you know, when I say it's not the same thing as digital, but it relates to the same concept, you know, what do we do in terms of fighting this kind of demand, specifically if some offers come back with relatively lower value from value, what's the point about that?
Yes, so what Robert was saying, so in fact, and maybe I will go to Joaquim's question after.
Yeah,
so you're totally right. So what I was saying, for instance, one sector that should be equipped with data and which is lagging behind is retail. For me, what I observe, even in large companies, they should be able to be on the forefront in terms of data, the accuracy of the recommendation, and so on, and they are not. And why? Because I think there is a lot of hypothesis done on elasticity, for instance. No, that's a bit what you have in your question. I don't believe that it's only commodity and hard discount and no value and just price against volume. I think it's much complex than that. And one other way to get to that is to have a very clear documentation, let's say, or modeling of elasticity. The only way to do it, for me, again, maybe I can be wrong, but is through experimenting. So only few companies have a control of the price changes they do. Is more the opposite, is totally uncontrolled. The point of sales have some discretion of the price, the HQ, there is promotion which are central, promotion which are local. So if you think about the net price level, there is a really lack of control, but also on a testing and control logic to be sure that if I increase here on this SKU, I have an effect on volume. So this hypothesis where we are in a commoditized market, it's really a price market and so on, it's much more gray than that. And the more you control and the more you experiment, the better. So here, when it comes to optimization of prices, the real only optimization is the one that you can deploy if you are able to test these changes. So again, and then the elasticity curve is around threshold as well. So it's not 1% or 2%. There is different movements on the curve that have different impact. And then that's also the other element, which is also related to your comment, which is an interesting comment, is that going back to the connection of data flow. If your, let's say, price point decision, list price, as you say, are disconnected from the reality of the market and the granular and local point of sales related to the market, all the list price you push to compensate devaluation or commoditization or competitive pressure, whatever, in fact are virtual. So you're increasing constantly, but at the end, at the net level, you are still keeping the same net prices. So all that needs to be connected. It has to be connected, and any change you do needs to be driven by experiments.
Yeah, I'm looking at time. We have another 2 minutes before you move to the next to your next meeting altogether. But I think one of the things maybe there'll be some follow-up questions. You have Manu's email on the slide, so feel free to directly write to him. That's the purpose of, obviously, to also connect people. One thing that is for sure is, me being myself in a data-driven world, it's not when the problems occur that you need to act or react. And I think I guess on the talk and the speech that Manu provided, it's an ability to build an architecture or to actually try to assess and harness the value of your data is obviously crucial. And it's probably the last thing that marketers tend to do in a crisis situation, unfortunately. However, what Manu described seems to be very advanced. I think so there's some question about the questions that academic models, in fact, there are a lot of academic models that have been developed on pricing that are underused by practitioners. From that standpoint, I'm sure if if you want, Manu can probably follow up on that. You can directly get in touch with him. But very importantly, I guess probably we cannot do anything new if we do not know exactly what has been working and not working in the past. So number one lesson probably. Number two, back to what Manu provided, experiment is key, but you need to actually set up experiments and actually track the results of your experiments with input and outputs, and that's the value. And expect value from your ability to experiment, to then forecast and predict what could be happening. With that said, given it, we have 2 minutes. We're 2 minutes away from 3 o'clock. Unless there is one small questions, and if so, please feel free to stand up and ask your question, and then we'll leave Manu to go, and we'll release all of you for the afternoon. Any additional question?
And feel free to reach basically by email directly. I will try to, or if Laurent, you can just capture the question in the chat, I will try to answer remote, so we can have you can have an answer, because there is a lot of very interesting questions.
Yeah, very interesting question indeed. Yeah. And I will actually strongly encourage you to directly get in touch with Manu. That's also the ability of this kind of meeting, to try and learn, share, and connect people in a very positive and open way. With that said, I just want to thank all of you. As we said with Manu, it's not quantity that matters, but quality. So thanks to Manu, thanks to all of you to have stayed on connected till the end. Very interesting issue, and just realized myself as I was discussing with Manu that we often forget that revenue is directly linked to how many products you sell, but obviously to the price you pay for. And as such, it is probably true that price is probably the one P in marketing that is looked at and undervalued, and we should be putting direct ability to control that, specifically as it speaks very much to CFOs of this world. So, and accordingly, thanks very much. Thanks again to Manu. Thanks to all of you. There'll be another meeting next week with a professor as well, with a very practical view coming from Northeastern University, Boston, and that will speak about marketing investments in crisis, looking back at works and what doesn't work, with a list of do's and don'ts, again coming from modeling learning. And then we'll have a stop before June 18th, where we will actually welcome superstar as well in the field of modeling. It's Pete Fader, that has been working on the customer equity and customer lifetime value for ages. With that said, thanks again, Manu. Thanks to everyone. And we'll welcome you soon. You will receive a quick feedback form to answer. Just take 2 minutes of your time. That will help Manu in its improvements, as well as myself in the next programming to come up. With that said, thank you very much. A bientôt. Hasta la próxima, como se dice en español. Ciao.
Thank you very much. Bye.
Bye. Thank you.